Hi, welcome everyone. This is Andrew Hart from ETF Trader, and today we want to take a look at the top 10 strongest ETF trends out there right now. Now, there's a lot of different ways that you can take a look at trends and measuring the strength of the trend. So, very quickly, I didn't just want to give you a list and worst off not let you know what to do with it, but also not let you know where it came from. One of my favorite technical indicators out there is ADX. It's part of the suite of indicators of the directional movement indicators like DMI positive, DMI negative, directional movement indicator bullish or bearish, and of course the complementary indicator with those is ADX. So the DMIs, which we don't have on the chart right now, would tell you whatever the prevailing trend is. It would indicate if it's a bullish or bearish trend. But ADX is the key. It tells you how strong the prevailing trend is. We may be in a bullish environment, but is it strong enough for you to say put your capital at risk on a short-term basis or even a long-term basis? So ADX is really a phenomenal filter tool to help you define where the strongest trends are. And of course, it can also tell you when trends are potentially just too strong or have weakened enough for you to take your funds out. So ADX will trend higher depending upon if it's a very strong bull trend or a very strong bear trend. So what's the key level here? It's very important for everyone to know that ADX at the 25 level, when ADX trends above 25, where you see that little horizontal gray line there, when you do see that trend above 25, that means that the trend is now very strong. So if it's a prevailing bear trend, as we saw right here, looking above, now that it's crossed above there, now it is a very strong bear trend. Now the question is the next, well, when does that end? Is there an exhaustion point for ADX? And you can take a further look out here and see that, yeah, we can make the assumption here just very basic based on the SPY, the S&P 500 ETF, that it looks like around that 45 level is where ADX tends to get exhausted. Looking for exhaustion points based on momentum, the directional movement indicator is my favorite way to do that actually is look at the difference between DMI positive and minus. Whenever the difference between those two values becomes positive or negative 30 or above, that's a typical reversal or trend exhaustion period. But we can see that pretty clearly here on ADX. Again, that 45 level looks to be pretty solid. Now, taking a look at the chart above, you will see that we've got the top 10. There was actually 14. And it's very important to understand what filters we use. It wasn't just ADX. We wanted to make sure we had a core list here just for this short-term trend here. But basically, we looked at any ETFs that were greater than $5 in the closing value as of yesterday. We wanted to take a look at any ETFs that had volume of 1 million shares traded or more, so the very liquid and big ETFs. We also took a look at no leverage ETFs and no inverse ETFs. So only taking a look at the strongest and biggest ETFs that were true to form, i.e. not inverse or not leveraged. In that, we got the strongest 10 out there. There was only 14 out there with those filters that had ADXs above 25. So let's take a look at a couple of them just very quickly. Obviously, FXE, we know that the euro has turned around very strong here over the last, and the dollar has obviously taken a hit in return. You can see here that this is a very interesting trend here. You can see that even by this filter, look at this. It's above 25. Is it heading higher, though? And you can see here where the bear trend exhausted once again. Where? Around that 45 level that we talked about. And it was a reversal point. At this point, when it's below 25, you don't look for any sort of trades. But now it goes back above 25, current bull trend, looking for longer additional bullish trends to continue on FXE. Also seeing a lot of retail and consumer discretionary here. You can see that it was such a strong bull trend that we've had for so long in retail that we still haven't gone back below that level, but we still remain. So that's a little sticky there. Looks for some more analysis there.